Welcome to this week's Fireside Chat with Jesse. I am joined today by Vince Belcastro, Group Head Syndications at Element Fleet Management. Thanks for joining me, Vince.
Well, it's my pleasure to be here. I really appreciate you having me on this, Jesse, and I look forward to, chatting about the various industry trends with you and so forth and so on, and what you have scheduled. So.
No, and appreciate your time, sir. I mean, I know you and I have met each other, I don't know, probably like when I first got in the industry at an ELFA event, and I always appreciate your time during the conferences, and look forward to learning more about your career today. Well, so for those people who might not be familiar with you, Vince, do you mind just kind of giving a background of yourself and your career in equipment finance?
Yeah, sure. So I have actually been in the equipment finance space on and off longer than a lot of people think. It really dates back to the early days of my banking career at Bankers Trust. I was, in a division that generally had both equipment finance and asset-based lending, and I was an analyst at that time, and equally, did both, that worked for both departments at the same time. I then moved on to help turn around a smaller bank that's long gone, Union Chelsea National Bank, which ultimately merged with Exeter Bank, and I'm not sure whatever happened to them. But that was a situation where the bank was, in a little bit of trouble with the regulators back on that was on the heels of the RTC mess in the mid '90s, and that. For people that don't know the RTC, it was so long ago, it's the Resolution Trust Company. It was a whole bunch of real estate fraud that went on in those years, and the bank had gotten itself in trouble. So I went with a bunch of BT people to help fix it. And I was tasked with running both credit and collections, at that small organization. I think it was probably $3-4 billion in assets back then. And, continued my career in equipment, again, mostly on the credit side and the collection side. Then I stepped away from equipment for quite a while. It's so funny how this industry always finds you back. So generally speaking, I was moved on to corporate banking, covering mining and metals, mostly gold mining in both US, Canada, and Australia for Republic National Bank. So, spent a good 4 years of my career at Republic doing that. Then I moved over to Citibank, spent 6-7 years at Citibank in their mid-market business, covering all kinds of professionals and industrials in the general New York City, 5-borough area. Very rewarding time. I also, was quite sort of the de facto expert on secured financing there, and often liaised with our city capital business, which was, which had run for a long time and then was ultimately spun off in the late '90s or early 2000s, or what have you, mid 2000s. And so quite frankly, had stepped out of equipment for a while. After my tenure at Citibank, I moved on to CIT. Worked for a dear friend of mine in credit on the asset-based lending side. Ultimately was asked to go help start up our newly found healthcare division, or help put the credit pieces of that together, and was one of the originators of that business line for CIT. From that, I moved back to, on and off, whether it's asset-based lending or any specialized assets businesses, you do a lot of restructuring, especially in asset-based lending. So in 2007, right before the downturn, I was tapped on the shoulder and asked to centralize a restructuring department for CIT Group by our vice chairman at the time. And lo and behold, that became, really one of my busiest 3-4 years in my career. It just, if you think about that, on the heels of the downturn that lasted from 07 to, in earnest, 10-11, that portfolio unfortunately swelled to close to $4 billion in restructuring assets that had run through our division at some point, covering both middle market, energy finance, SBA lending. I mean, the whole gamut, if you will. Including equipment finance. We had, CIT, this is no surprise to anyone in its long ago history, but really hit a rough patch during that downturn. Was in bankruptcy for 45 days, and we were searching for capital. So if you remember, in 2007, we had sold the construction division based out of Tempe to Wells Fargo. That was a big sale. I think Wells Fargo took about $5 billion of capital off of our hands, and we had a good $1.5 billion of specialized, real large ticket capital equipment finance. I ran that down to $66 million to be exact. I remember distinctly. And then in 2010, I lobbied when our non-compete ended. That was sold in the spring of 2007. So by the summer of 2010, that had ended with Wells. And truthfully, I started working on the business plan then. And we finally, after many, many months of meetings, and it was approved by our then CEO, John Thain, and I took it back to market in October 10. And in earnest, I've been, grew that business successfully for 5 years. And, at the same time, I was fortunate enough to have an opportunity through many meetings with them from, September on and until the launch to start the same operation I had reasonably the same operation with more of a bank twist at Santander Bank. I grew that to $3+ billion for them, and then ultimately sold a large part of it to then Sterling Bank, now Webster Bank. And, needless to say, that was a really interesting experience, a lot of fun, and enjoyed my time there. It's a great organization. Unfortunately, they decided that neither asset-based lending, equipment finance, and a few other specialty businesses, including the footprint in Puerto Rico, were something that were critical to the bank. And they, decided that a sale would be a better option. And look, in that summer, I had started discussions with Element, and happy to say that I joined what is otherwise a fantastic organization, and we've done a lot of great things together over the last couple of years. So 2.5 years, and we'll continue to do that. So.
It definitely sounds like you've been a part of a little bit of some roller coasters here and there. I mean, what was it? I remember when CIT sold to Wells. So were you on the sidelines for 2 years, or do you have to wait for your non-compete to roll out, or did they keep you on board for some of that?
No. I look, honestly, at that time I was still on the commercial bank side of the house. I wasn't in the equipment finance division per se. As I was running restructuring, I was actually one of the busiest people at CIT at that time. We had so many defaults coming off of, you think about the period between 2005 when the last downturn ended, which was very mild, until the Great Recession. Every bank was putting on paper with a lot of leverage finance folks and asset-based lending sponsors. And truth be known is, the credit markets had become very frothy. So given the Great Recession of 2007, 8 till 10, 11, we had many, many defaults. And so those defaults are what ultimately led to the decision to try to raise capital. We actually got a very good premium for the business in Tempe, the construction finance business. And truth be known is, I was in restructuring at that time, so I was the benefactor of that business because, quite frankly, the whole lease book remaining was about $1 billion, $1.2 billion, and they asked me to kind of wind that down because of the non-compete with Wells Fargo. So not so much on the sidelines as much as, quite frankly, wearing a different hat in the equipment finance space at that time.
Perfect. Thank you sorry, I misunderstood that.
Okay.
Anytime I see some of these people where it's like, yeah, I have to sit out for 18 months. It's like, God.
So no, I never left the organization. No,
you're like, I wish I had an 18-month or 24-month sabbatical. That would have been fantastic.
No. So that was, so I think altogether I was at CIT about 15, 16 years. So it was a great run, good organization. And certainly they've now merged with First Citizens Bank, and, all the best to them.
So do you mind kind of introducing Element Fleet Management, Vince?
No, it would be my pleasure. So Element Fleet is really it is the largest fleet services company or fleet management company in North America. It's an agglomeration of a few businesses, or a compilation, I should say, of a few businesses, mostly GE Fleet, and PHH, and then a few tag-ons, First Fleet, which is largely a heavy truck business, and then some other businesses that have since spun off. Element Fleet was put together, I want to say the beginnings of it go back to 2010-ish, or even before, 2009. Steve Hudson, who previously sold his business to CIT in 1998, 1999, took some time off and then restarted this business. Ultimately, it was spun off and it became public. And quite frankly, this is a very interesting business model. For all intents and purposes, Element is call it 18 to $20 billion in assets asset manager, who quite frankly chooses to basically be not only a finance company, but truth of the matter is, the large part of the revenue base comes from either purchasing and selling any kind of vehicle, to providing all of the services that go along with that, whether it's accident management, whether it's fuel, whether it's tolls and violations, or a host of other things that we do, maintenance. It is a full service lessor, and quite frankly, we have operating agreements with many service providers all over the United States, and we're blessed to have a very large customer base of over 300 clients. Largely 75 to 80% of them might be, are largely in the investment grade space, both in the U.S. and at least in the U.S. and Canada, and Mexico. Is certainly growing. It's probably our highest growth area right now. It's been a fantastic operation. It is part of the old GE Fleet Mexico, and then on top of Mexico and Canada, we also have quite a sizable division in Australia, New Zealand. So quite frankly, it is truly a global, and then certainly in partnership with our European partner, Arval, it truly is a global equipment finance operation and fleet management company.
So are you allowed to go overseas and check out these other locations at all? Have you been afforded that yet?
Not yet. I mean, at some point, as we start to build syndications and certainly into Canada, I mean, reality of the matter is, as we continue to build the syndications machine here, so to speak, we are in the process of onboarding Canada, which quite frankly, for a fleet company, is a huge success story. There are, a lot of challenges with doing light vehicle syndications in Canada, mostly through governmental, restrictions. So happy to do that. We found a, very smart legal way to do that. And then certainly, Mexico over the next 18 months or so will begin to come online as well. So it's been an interesting and rewarding 2.5 years. And it's, look, public company, trades on the Toronto Stock Exchange. And, you can see that, our executive leadership team has done a great job continuing to grow this company and maximize returns for shareholders.
Perfect. And from a headquarters perspective, is the headquarters in Canada, or where are you officed in the US?
Yeah, so our headquarters is in Canada, right on Bay Street. So that is effectively the headquarters of the business. Most of the operations actually are spread out between Mississauga, Ontario, Hopkins, Minnesota, and Sparks, Maryland. And so if you think about it, Hopkins is where the old GE Fleet used to be. And then quite frankly, PHH, which was in Sparks, Maryland, right outside of Hunt Valley. So those are the 3 areas where we'll continue to have footprint, as well as we're covered, not only nationally, but internationally in the countries I've mentioned by a whole host of of sales folks that cover all those territories and account management folks. I am actually headquartered in New York City, and continue to have an office at Rockefeller Center in New York City. So.
Nice. And you know, one of the things you mentioned before regarding you being kind of like a full service, you know, to your owner operators or the fleets that you guys manage. Have you been seeing anything on like the mileage, like you know, like the usage base of some of these trucks? Like, are people asking like per mileage? Have you done any of that whatsoever?
Yeah. So the answer is no, we don't. So if you're thinking a usage-based model, sort of like
I know it's kind of weird where it's like, yeah, from a copier you pay as you go, but I wasn't sure. Just
no. So we don't do that. Our clients generally have quite enjoyment on their vehicles, and truth of the matter is, it'd be hard to switch out a vehicle to, you know, kind of have someone drive it in the day. And so no, they're with the clients. They're used by our clients exclusively until either lease term or an early termination event occurs for whatever reason. I don't know that this model would open itself up for that. I mean, you know, largely we benefit from clients that have in-house fleets that want to convert to externally managed fleets. And, you know, I think when you go from that model, it's very hard with the vehicle to kind of say, look, you're going to use it part of the time and we're going to charge you X for miles and then give it to another client. I mean, they may have another driver, but it always sits with the client. And it's, as you can imagine, you know, then there's insurance considerations and what have you. So,
absolutely. It was just more of a curiosity on my end, because I know if you guys are, I'm not sure if you have GPS units on your vehicles where it's tracking oil, you know, usage, everything. Okay.
Well, those that is telematics is what you're talking about. But truth of the matter is it's you know, certainly a big division for us, because it tracks all of the usage on the vehicles, all of the, you know, where the vehicles are. It educates customers about how the vehicles are being used, and you know, certainly helps with all of the maintenance side of the
absolutely.
So generally speaking, yeah, we do have telematics on those, and it's something that, you know, I'm sure will be a part of, as companies thirst for information on almost everything. I'm sure that, quite frankly, that will be a division that continues to grow.
I just think where it's like, hey, before you log this next 2,000-mile run, you might want to switch out your tires and get an oil change.
Yeah, exactly. So yes, and some of that does go on. So that's effectively correct.
So you know, I know in the previous roles that you've had in organizations, you were basically running these main companies. You know, what is that like now, Vince?
Well, look, I run my division, which I will tell you, this division is just about as big as any. Look, it's certainly, from the amount of volume we put out there, is just mind-boggling to me that we've been able to ramp it up so quickly. But it goes to show you, you know, sort of the strength of the organization, and, you know, how fortunate we are to have the clients we are. And even in a challenging time for the automobile business, we're able to extract that value and find the assets, which goes to show you to the tenacity of this business model. So look, if I think about both of my divisions at CIT and here, honestly, or both of my companies rather, honestly, not only from a volume standpoint, but even from a headcount standpoint, it's starting to be as big as both of those, to be honest with you. So, you know, it's, look, from it, while those were much larger companies as a whole, both certainly CIT, certainly Santander Bank, a top 10 bank in the world. I mean, they weren't, the size of the equipment operations was not what was making them that large. It's just the largesse of the banking operation. Here, it really is the size of the equipment operation, because 100% of the time we do equipment here. It just happens to be that the equipment is generally limited to rolling stock, material handling, occasionally some off-road assets for our clients, whether they be tractors, backhoes, etc. But yeah, so that's, I think, the difference is that, look, it may not from a company standpoint be as big as some of the ones I've mentioned, but from an EF standpoint, it certainly is. And
Yeah.
from, quite frankly, a volume standpoint, it's certainly, yeah. So,
And then from a syndication perspective, or I guess just from a rolling stock perspective, some of these residuals based, I mean, I see my my car is like 6 years old, and
yeah.
I see the residual on it, and I know it's more of a private vehicle compared to a rolling stock. What do you think of those residuals, and like when that goes in? Obviously, the resale market's really hot, right? But
Yeah, yeah. The resale market is exceptionally strong, and I'll note that we have an asset management group that's 10 to 12 strong out in
okay,
Chicago. What they do is manage assets all day long, and they do a great job at it. So you're right. We have our gain on sale has been reasonably strong, given the fact that we are in a really strong automotive market. And look, I think that no one has a crystal ball. I can't guess, but I think that it's, this chip shortage is taking a bit longer to kind of, get itself right-sided. And if it's not chip shortage, it's material shortage for all different kinds of parts these OEMs make. So it's probably here for a while. And yet, we continue to manage through. And I do think that given the price of new cars, the used car markets continue used, whether it's cars, over the road tractor trailers, class 5 and 6 box trucks, they all experience the same issue right now, which is supply constraints. So that should buoy the markets, one would think, for quite a while longer.
yeah, it's almost like one of those things where it's like, okay, what's the next fire drill here? First it was chips, then it's going to be tires, then like what parts? Like
Yeah,
parts take forever to get in.
that's
It's kind of like, come on.
well. Hopefully, look, it's a disruption. So hopefully, this really starts to get right-sided next year. This can't honestly go on forever. It's just taking way too long here. So,
I mean, from a salesperson's perspective, it's not that bad, right? Where it's like, hey, if you want to secure this, we're 18 months out. What better way to close a deal?
I couldn't agree with you more.
I'm going to pivot a little bit to the ELFA, if you don't mind, Vince. So obviously, we probably met each other at an ELFA event for the first time.
At least,
I know you've been on the board. Do you want to just kind of talk about the ELFA and some of the positions that you've had?
yeah, sure. Look, I will tell you that I don't have enough good things to say about the ELFA. I think it's if I compare it to some other industry organizations that I have been, involved with as a banker, it's a well-run organization that does a nice job on a national level, getting us together and quite frankly, putting out a whole host of, research and advocacy and whole, and just general support for the industry, whether it's specialized events, whether it's any one of, either the funding conference or the annual conference or the machinery conference, the equipment managers conference, rather, credit and collections. It's just a top notch, at a national level, a top notch organization. I certainly enjoyed my run. I think I was on the board for 5 or 6 years. I was fortunate to be on the research foundation board. It looked like it's led by Kelly Neighbor. She, as you know, is a great advocate for the research foundation, and truth of the matter, does a nice job managing it. So it's definitely, as a whole, been a very positive experience for me. And I would say that everyone really should be involved with the ELFA. And secondly, to the ELFA, I mean, not only the ELFA, but look, over the last few years, I've really have, been fortunate to be on the editorial board for the Monitor as well. And, Lisa Rafter runs a great organization there. Certainly you think about a publication that has unofficially or officially become the voice of equipment finance in many ways. They've done a great job, and certainly with some of their educational tools that they've now put out there, whether it's Stripes or what have you. it's just, it's equally been a very rewarding way for me to give back to this industry, which I have come to enjoy so much. Honestly, as I look back over my banking career, clearly I would be remiss if I didn't say my last dedicated 15 years or so in equipment finance have been, certainly the most rewarding for me. And I think it's not only the opportunities and the positions at hand, but it's the people, right? This is an organization that is just filled with great entrepreneurial people that, is a little bit rare within banking, whether in banking or finance as a whole. Funny enough, sometimes in a big bank, we truly are sort of the redheaded stepchild that everyone needs, in some cases loves. But I'm certain I'll finish out my career in equipment finance because I do really love the industry.
Yeah, no, I mean, it's you can have friends who are direct competitors, and maybe you just lost a deal to them, but you still sit down and have a conversation and share best practices. And that's one of the things that I always kind of appreciated, was there's always enough for everyone, and people, you could just, maybe you lose on a couple basis points and it's like, oh, I really worked for a lot of time into that, but
Right.
see you on the next one.
Exactly. I agree with you.
And then yeah, I mean, the monitor, I'm sure being on the editorial boards, no sleep there, because Lisa, Susie, Rita, whoever, if I'm forgetting somebody, sorry ladies, but they're always looking for what's next, and they have some really good initiatives, and yeah, it's they've done a really good job spotlighting, especially on the individual side in the industry.
Yeah, not only the individual side, but friends, I mean, all around. So, I think those are two great organizations. And honestly, I don't know how, back to the LFA, I don't really know how you're, a participant in this industry, whatever you decide to be, without getting exposure and having, the LFA as part of the overall equation, because they just facilitate so much. And again, even the research foundation, it's just such a gem to have that. And anytime, look, I can tell you, we use it a lot. Anytime we need industry trends or any of that stuff, we're always looking at research and what have you. So a lot of great work there. And I, hope that most people listening here will find a way to support the Equipment Foundation. So truth of the matter is, all in all, I can't sit here and tell you that I can imagine being in this space without being an active member of the ELFA in one way, shape, or form.
And thank you for that, Vince. So new, I guess, advice based on your career in equipment finance to individuals who are entering this marketplace.
Yeah, that's an interesting one. So, look, I would tell you, there are parts of banking, this one not being the only one, certainly asset-based lending comes to mind, my other area, real expertise, a few others, where there is just continues to be a dearth of or a lack of young talent really coming into this sector. I think I can tell you, over the years with next gen and so forth and so on, again, the LFA has done kind of a nice job trying to get that out there, building awareness through, discussions at colleges and what have you. And that's helped a lot. It's gone, I think it really drives the note home. But as I often tell a lot of folks that come to me for advice that are younger or in college and getting out of college, look, our industry is never going to be as sexy as investment banking or even large corporate banking or M&A or any of that stuff, right? But, and I will tell you that I think, clearly this is an industry sector where not only can you have a rewarding career in equipment finance, there's certainly a desire and a drive to have young talent. And I do think over time, the opportunities, if you stick with it, will be great. And look, as you can see, we are fortunate to be in an industry that, enjoys $1 trillion of originations every year, $1 trillion plus. So it's a large industry. Almost every large bank has some presence in it. A lot of independents out there and brokers. It's a great way to really learn secured financing, and it's a great way to kind of grow your career. So I think that few things. One, learn, whether it's attending a lot of the breakout sessions at the ELFA, attending some of their 2-3 day, sessions run by Alexa Carnabella on sort of the basics of equipment finance and what have you. It's a good way to start, or some more advanced programs. I just think that there's a lot you can do to learn the industry. Liaise with people like me and you and a whole host of others who enjoy talking to younger developing professionals. I mean, I really enjoy that. So truth of the matter is, I just think that, this is a space that's often in a large banking organization or finance organizations at times can be forgotten or a little bit different compared to corporate finance. But honestly, we all know in many ways, it's a very important sector of every large financial institution. And honestly, it's the gift that keeps giving. You think about banking. Well, you're in a loan agreement. You've sort of locked up the loan agreement. It's put away on the shelf for 3 years. If you don't default or do anything, that's kind of it. You can sell ancillary things to a client. Here, you actually get to do it as much as the client wants within their financial ability to, hold debt and leases. The truth of the matter is, look, you could repeat with the client every 6 months, every year, or as much as it takes. And that's a pretty interesting part of what we do. Your contact space with your clients here is much closer than, often underwriting the loan agreement and just trying to cross-sell deposits or whatever else the banks may be doing.
Nope, and thank you for sharing that. I mean, I know, I know you've been on the board, and people can come up to you and ask you questions, and if you don't have the answer, you're going to point them in the right direction. Right. Same with me. I may seem like I know the answer, but sometimes I don't. You just push it onto somebody else that does not.
That's right. That's right.
So I ask everyone who comes on here, Vince, to give a little fun fact about themselves.
Yeah, so I had to think about a fun fact about myself. So, and I think I always look for trends and things over time that sort of have survived in my life. And so it's, it didn't dawn on me, but I'm a speed junkie. I love speed. And so I never noticed that. But if I think about all of the activities I love to do the most, downhill skiing, and I have skied all over the world. That's the thing I love to do the most. Fun fact about me too is I love to, safely ride motorcycles. I have 2 or 3 of them at any point in time. I have old 1960s era muscles cars that I'm constantly working on. Okay. So, I thought about it. What is it about those activities that I really, really kind of is a thrill seeker for me and that causes me to have the most fun? And it's not only the outdoorsiness of it. I do spend quite a bit of time in Vermont. That's about 3.5 hours from my office in New York. But I enjoy the things I enjoy are, skiing up in Vermont or wherever else in the world, or, riding my motorcycles through twisty, windy roads, or, quite frankly, cruising my old cars and so forth, and sometimes faster than they should, but always in a safe manner. So I think that's a fun fact about me. I love to, over the years, same thing with my I ride a road bicycle. Commonly it's not hard for me to be down a hill at 50 miles an hour on that bicycle, going down a steep hill in Vermont or something. So I think that as I think about that, and I think about the threads, I think that I never realized until you posed a question that a fun fact about me is I love speed. I love to go fast, and I love that stuff. So it gets me in a different state of mind, and gets me on my game.
So adrenaline, you feed off it. That's great. Have you ever done any of the NASCAR the test drives, or those Formula One cars?
I don't. So I haven't done a test drive for Formula One or for NASCAR, but drag racing. So I've been to quite a few of those events, and they have a place in Pennsylvania where you can actually do that with someone in the car, like they do with NASCAR and so forth. And I don't look, patience is not one of my virtues. I will tell the audience here, quite frankly, I want things and I want them done. And the cool thing about drag racing is it's over in 3 to 5 seconds, depending, or, if you have the street car, it could be 10, 11 seconds, but it's kind of over and done. And then you get to start another race again. I don't love sitting there watching cars go around in circles. So no.
That's fair. That's fair. I think the biggest thing from an adrenaline that I've ever done is jumping out of an air, like skydiving.
Yeah.
I don't know if you've ever done that before, but that you talk about speed.
Yeah. So I did do that when I was 19 years old. It was a static tandem dive or whatever it was out in New York. And look, the one thing is, it's probably, yes, that's a big adrenaline rush, but probably not for me. So I haven't done it since.
Fair. So, I told myself if I lost like 30 more pounds that I would consider doing it again. But when you're like on the threshold of maybe you shouldn't do this, and it's like, I should take that. I should take advice.
Yeah.
But all right, well, thank you for sharing that, Vince. So last question I have for you. At the end of the day, from a fleet management perspective, why should individuals or organizations choose to partner with Element?
Yeah, look, Element is, quite frankly, the most mature player in this space. They've been doing it a long time. They, quite frankly, are a Class A operation. I think that the client list we hold and continues to renew with us time after time and time again certainly proves that. They are some of the largest companies of the world, period. I think that speaks for itself. I think the array of services we're able to offer, both from a cost perspective and a quality aspect of it, and then coupled with our relationships with all of the original equipment manufacturers or the car manufacturers themselves, the automobile and truck manufacturers themselves, goes a long way to, quite frankly, having that client get the best possible deal and knowing that they have, reasonably the largest, most stable, and quite frankly, blessed with a geography that not only covers all of North America, but also through partnerships in Europe and then directly in Australia and New Zealand, is just it's hard to replicate that, right? There's just not a lot out there. So it's quality of the organization, quality of the people that support our clients and help run our organization. It's the quality of the services, and basically, given our size and our place in the industry, it's look, those clients I think benefit from getting better rates and so forth and so on with our relationships with our original equipment manufacturers. So I think those are all the things I can sit here and tell you at a minimum of why Element is sort of the go-to partner for your fleet management needs. And for what it's worth, the good news about this company is when you think about the strength behind its original roots of GE, when it was GE Fleet, and then even PHH, I mean, those are long-standing organizations, and they both have gotten better from a technology, a process standpoint, and all of those benefits not only to our shareholders, but also our clients.
Well, excellent, sir. Well, I really appreciate your time today, Vince, and look forward to it. Probably see you Marco Island. Is that the next conference?
Minimum, it will be Marco Island, and hopefully before then, my friend.
All right, sir. Well, I appreciate your time today, and thank you very much for sharing your story and Element.
All right. Well, thank you.
Thank you.
Thank you for having me, and I look forward to seeing you as well.
All right. Thanks, Vince.